Looking at the absolute quarterly GDP of India over the last decade shows some interesting trends. Although there is a seasonal volatility as seen in the ripples on the curve, the annual trend is of growth. The curve moves upwards at a steady pace. There's generally a slump every year during Q1, April to June. This is the quarter post budget announcements. Annually, there's a strong rally around Q3, October to December. This quarter sees a lot of major festival celebrations in India. Interestingly, the COVID slump brought India's production to 2015 levels. Given that the lockdown affected Tier 1 and 2 cities more than smaller towns and rural India, a simplistic inference that can be drawn is that small town and rural India today contributes to production as much as all of India did 5 years ago. Also, they seem to contribute to almost 70% of the GDP. If we look at the annual GDP, India had an average annual growth of 6.6% in the last decade. The minimum was 4.2% in FY 1920 and the max was 8.3% in FY 16-17. COVID-19 lockdown during FY 2021 Q1 led to the quarterly GDP to shrink to 27 trillion rupees from 38 trillion in the previous quarter. If the next 3 quarters perform at the pace set by the quarters before COVID-19, we will be on course for a classic V-shaped recovery. China has shown a similar recovery in the last quarter ending June. In a V-shaped recession, the economy suffers a sharp but brief period of economic decline followed by a strong recovery. Post-lockdown, if the next 3 quarters GDP is in the range of FY 1920 Q4, that is roughly 40 trillion rupees, the annual GDP growth will be positive. Even a simple recovery like this would translate to a potential 50% QoQ growth during Q2. This steady recovery would lead to a 1.5 to 2.5% annual growth for FY 2021. Yet again proving the volatility of QoQ GDP numbers and the importance of understanding the different terminologies associated with GDP.